Let's see here. There we go. We've got one here. So let's calculate some of this here. So the first one, the question is assignment problem 3-5. We'll have a look at that in a moment. Yeah, that's the one. And we'll calculate a couple scenarios. Oh, and I got the actual physical text here with me today. So let's see. So 3-5 is at the top of page 131. So in this question, we've got a company called Kaplan Limited. It says the policy for Kaplan Limited is to provide automobiles to 4 of their senior executives. So the cars may be used for both employment as well as personal. So they're allowed to use these vehicles for personal as well as for work. It says when it's not being used by the employee, the company requires the cars to be returned to the company's garage. So if the employee is using it, they can keep it at home or do whatever with it. When they're done with it, it's returned. For 2020, the details regarding the use of the cars is as follows. So we've got 4 different senior executives. We have Bambi, Sheldon, Melissa, and Jerome. And they each have different vehicles and different scenarios. So let's start out with Bambi. So Bambi is provided with a BMW 300 series. The company leases this vehicle for $650 per month. This amount does include some insurance, $110 per month for insurance. She drives a total of 57,000 kilometers. I get out my calculator here. So she drives a total of 57,000 kilometers. 21,000 is employment related. So 21,000 of employment kilometers out of 57,000. So the very first thing I would do in this question, so that I know which direction I'm going, is I would take the 21,000 and divide it by 57,000. And I just did that, gives me, I'll round it, rounds to 37,000, or sorry, 37%. So that is the employment-related usage is at 37%. So we know that we are less than 50. So there's going to be no reduction in the standby. And that alternate calculation for operating cost cannot be used. So we know that right off the bat. So we're just, because we are less than 50, we're going to go ahead and just do the straight calculations. So for standby charge, when you have a lease, this is going to be our formula here. So the 2/3 is just a fixed amount. Let's read a little bit more about her here. It says operating costs, all of which were paid by the company, totaled $11,300. Because of her extensive personal use of the vehicle, Bambi pays the company $200 per month. So there's a couple things going on there. It mentions that the operating costs were paid by the company. It does matter that the operating costs were paid by the company, because if the operating costs were paid by Bambi, then it would be a reduction. So Bambi has paid $200 per month. So the $200 per month that Bambi pays is reduced right here. So that's a negative. We're subtracting from the total because she paid out of her own pocket towards the expenses. The fact that there's $11,300 of expenses is irrelevant for purposes of this calculation. So the actual operating cost amount doesn't matter because we do a calculation of the benefit. Like we have a rate. It doesn't matter what the actual cost is. That cost would be deducted by the company. Fine. They do need to keep track of it. But for this purpose, we're not worried. We're only worried about what Bambi reimburses the company. So that's one component. That's a reduction in this calculation. The operating cost benefit is going to be strictly the personal kilometers times 28, because we could not do any kind of a reduction or other options with this one because we're less than 50%. We're only 37%. So we're just going to take those straight kilometers. So we know it's 57,000 in total. 21,000 was for work. So she was doing 36,000 kilometers for personal. So she has to claim a personal tax benefit of those 36,000 kilometers by 28 cents a kilometer. So that is worth to her $10,080 of personal benefit, which she needs to pay tax on. The standby charge, well, she had access to this. Basically, the 2/3 is just in the calculation. 12 months is because she had access to the vehicle for the whole year. And then multiplied by the payment, but we had to subtract out the insurance. That's not always going to be the case. If there is no insurance involved in the lease payment, you don't have to do anything. When there's insurance involved, take it out. We just want the raw lease payment, HST or GST included. Now, HST and GST is not mentioned here in the question, but if it was, you want to make sure it's included. That's part of the benefit. So that gives us our standby charge benefit. We add all of these together, and she has a total benefit of $12,000. So let's take a quick step back. What are we doing here? We have an employer who has provided a vehicle to their employee. The employer is paying for it. All those costs that are mentioned, right? All those fixed payments, all the operating costs, the gas, the repairs, the employer is taking care of all of that. They will deduct that on their corporate taxes or whatever. For the employee, you have just received the benefit. You didn't have to pay for the car. That is a taxable benefit, and it has to be reported. It is the responsibility of the employer to report that income, to put it on your T4 slip, to calculate it and put it on your T4 slip. You don't have to calculate this as an employee. However, you are responsible to pay tax on that income. So if your employer forgets to report it, say for 3 years, and then they get audited, and then CRA calculates it for them, that's going to get put on your T4, and you're going to have to pay tax on it. So you can't, play dumb. I didn't know. If you're getting a company vehicle, that is a taxable benefit. There should be an amount of money on your tax return for that. That is income. If we didn't have rules like this, then nobody would ever get paid a paycheck their employer would just pay for all their living expenses, right? It'd be that easy. We can avoid tax by just paying for things for you instead of paying you directly. So anytime an employer pays for something for an employee, that is potentially a taxable scenario. There are exceptions. We talked about, your health care. An employer can pay towards your, say, Blue Cross health plan, and that would be taxable. But if they pay for your vehicle, that is taxable. Most things your employer does pay for are going to be taxable. So it's their responsibility to report it, but it's your responsibility to pay tax on it. So ultimately, and I've seen this where, an employer didn't do this correctly, and then a bunch of employees, kind of get hung out to dry because they get 3 years worth of tax reassessments and now they owe. So if you learn anything from this class today, if your employer ever provides a vehicle to you for personal usage, then you should make sure that there's a tax benefit on your T4 and you pay the taxes. Otherwise, that could come back around on you. Let's look at another example here. So for Mr. Sheldon Captain, he has a Lexus GS. The company this is also a lease, $1,100 per month. In this case, there's no insurance, so we don't have to worry about insurance. It says during the current year, he drives a total of 34,300 kilometers, of which 32,600 are employment. So 32,600 divided by 34,300. I mean, we could eyeball this calculation, but just for fun, I'm doing it. So he is 95. Whoops. He is 95% employment usage. So he's on the extreme end that this vehicle, there's really not much personal usage on it at all. So with the higher employment usage will come a much lower total benefit. So somebody at 95%, you're going to expect a small benefit. Somebody at a lower like 37, you're going to expect a higher benefit like 12,000. So this is all because, if this person had to go get their own car to do this, then they would have to pay that out of after-tax dollars. So this is a taxable benefit. So let's look at Sheldon. So the operating charge is going to be the 2/3. We are going to just use the lease payment. There's no insurance to worry about. But what about this 8? Well, it says at the very end, it says that the car is available to Sheldon for 8 months during the current year. So we're not going to charge him for a full 12 months like we did up above. He only had it for 8 months. So we're going to assess to him 2/3 of the lease payment for the months that he did the lease payment. This is the monthly lease payment. That's why it's just simply 2/3, how many months you've got it, times the lease payment. That's it. It's that simple. Now, he is at more than 50% for employment purposes. So that means he can claim the reduction. How do we do the reduction? Right? This right here is our calculation for that. This 1,667 is a fixed number of kilometers per month. So in this case, it's 1,667 times 8. If it was 12 months, the most that figure can be is 12 times 1,667, which is going to be 20,004. So a base total kilometers of 20,000, if you had 20,004 to be exact, if you have it for the whole year. So it's kind of thinking an average general number of use. Now, the 1700 in here is our personal kilometers, right? So that's simply 34,300 minus 32,600. So I don't think it shows that here in the calculations, but that's 1700. That is the personal usage. So you just simply do the math. 34,300 minus 32,600. 300 minus 32,600. That's how we got that number. That's all. So it's the personal use. You're going to reduce it by this factor, the personal usage divided by this fixed number. Let me do a quick thing here. This is a fixed figure, but you're going to multiply it by however many months. This is a fixed figure. It's always 2/3. And we're doing the reduction because we're at 95, which is more than 50. So we've factored in the reduction, and we're going to get 748 for the standby portion of our calculation. The operating cost benefit. Now, here's where we have to look at two different options. Two different options and pick the lesser of. So don't do this math in your head. Show your work. Show all of your detailed work. When you have different options to choose from in tax, calculate out all the options and show me that you've chosen one of them. So we calculated both of these. That's earning points, and then we accurately choose the lowest one. So in this case, it would be his 1,700 of personal multiplied by 28 cents. That's also a fixed rate for the year 2020. Or 1/2 of the standby charge. So he has the option to do 1/2 of the standby charge here. If that's lower, go for it. So we did, and then we get the total amount. If we look at the next, and you guys can work through these other questions, we've got a couple other scenarios. With Melissa Kaplan, this is an owned vehicle. So now we're doing 2% times the month times the total cost of the vehicle. So it's just a little different calculation because this is owned. So that's the owned vehicle example. Here, we were at less than 50%. So we couldn't, so no reduction, cannot reduce, cannot do the 1/2, can't do any of that. So this is a straight calculation. Personal kilometers times 28, times 28 cents. 2% times the number of months available times the cost. That's it, straightforward. Then the last one we have is Mr. Jerome Kaplan. And the trick on this one, so this guy is also, this was an owned vehicle. So 2% times this, in this case, he was eligible for the reduction, right? We looked at him. He had drove 93,000 kilometers and 24,000 involved personal travel. So be careful when you're doing these questions. It might tell you the personal travel and you have to calculate the employment. Or it might tell you the employment and you have to calculate the personal. So make sure you keep clear on what number they've given you. So if his personal travel is 24 out of 93, then 69 is going to be his business. 69 over 93 is 74%. So he's at 74%. So he is eligible for the reduction. But remember, this reduction is a reduction. So it can't be more than 1. Whoops. Numerator cannot exceed denominator. In other words, it only caps out at 1. It's not supposed to make the standby charge higher. It's supposed to reduce it. In certain scenarios, it will not reduce it. And that is going to be based off of your raw calculations. This guy has really high usage. So if you take his, what did he have here for total? So he had 93,000 kilometers in total. He had 24,000 personal travel kilometers. That is more, right? So he had 24,000. That is even more than the 20,000 that you'd have in that calculation. 1667, right? The fixed, sorry, the 16670 divided by 12 is, oops, no, let me go up. I'll show you the one we were looking at there before. This one here, right? The 1667. If you take 1667 and multiply by 12, that's 20,000. So in this case here, he only had it for 10 months, I believe. Yeah, only had it for 10 months. So he's only 10 times the 1667. So that's his denominator. And he clearly had 24,000 kilometers, which is more than the 16. Even if he had had it for 12 months, and then it would have been 20, he would have had 24, so he would have been over. So this is the little trick to this one. I see we're at 9:46. So just to wrap up, that watch for that. It cannot exceed 1. The reason why this would happen, that you would cap out at 1, is because your kilometers are more than whatever that base is. So if you had it for 12 months, that would be 20. In this case, it's 10, so it's 16. But for him, it was 24. He's well over that, so it caps out. So even though he's at 74% and would be eligible to reduce the standby, it's not actually going to get reduced because of the math, because he has such a high, just raw number of personal kilometers, then he doesn't get to do the reduction. That's what it all boils down to. Even though his percentage is high, he just has such a high raw number, meaning more than 1,667 per month. And then after that, you do the operating. This is the last part to this question. The operating cost benefit, you calculate both of them because he's at 74, 50 or more, so he would qualify to pick. Well, look at this. Half of his standby charge is actually higher than the normal 28 cents calculation on 24. So he also has a little bit of a weird scenario there. So this is too high, so we're not going to pick it. We're going to pick, this should actually be over here, the 6720. We get to choose here the lesser of. So it's not always going to be the half standby. In this case, his standby is pretty high, and the way these numbers just crunch out, that's the one we pick. So that is it for today. Thank you for your attention, folks. We will, when we come back next class, we'll still talk a little bit more about Chapter 3 before we get into Chapter 4. We will talk about the other scenarios. This number crunching is employer-owned vehicle provided to the employee. We'll talk next class about when the employee brings the vehicle.